over 5 million. Um,
There you go.
they're off to the right start, and they're going in the right direction at least.
Right. That's good. So, I guess, tell me about your business. Tell me what's going on. I mean, we'll run a intro at some point, but like talk to me. Tell me about mortgage in the world of Fincast.
Yeah, so Sam, thanks for having me on the show. Really excited to support the Real Talk podcast. By the way, great name. It's awesome. Um, we are building Fincast. My name is Benjamin. I'm the founder. And we're building Fincast to do our small part in helping to make homeownership a little bit more affordable. Not necessarily by, changing the pricing of homes or the rates for people particularly, but just exposing options in the market that people are historically struggling to find by creating a little competition around their product, their demand. So Fincast is the first AI deal finder for mortgages that helps home buyers find savings and choose better options. Really simply, we discovered that the right way to shop for a loan based on personal experience and based on the 5 years that I had as an originator and running a mortgage branch. Um, we know that the right way to shop for a loan is to get multiple loan estimates and try to find the right fit, try to find the lender that has the demand for your product, and that is willing to either bend on price or has the best pricing for you. And the truth is that the CFPB, Fannie Mae, Freddie Mac have all proven that there's substantial savings the more offers you get. The problem is, historically for home buyers, it's been very stressful, very time sensitive to get offers, and going through that process with a multitude of lenders is not really something that people feel totally comfortable with, are aware of, have time for when they're buying a home. Especially because the guidance shows and the data shows that the best time to shop is once you have a loan estimate. Unfortunately, for a home buyer, they only get a loan estimate, a legitimate loan estimate, after they've gone under contract for a new property. Um, and so, most people will shop a pre-approval or shop a fee sheet or shop a loan summary or quote. And that's okay. But the reality is, lenders, and I'm speaking from personal experience and from the collection and network of lenders that we've built throughout the country, as a marketplace technology, um, lenders don't really feel super compelled to compete to beat an unofficial offer. And the only official offer that a borrower gets from a lender is a loan estimate. So if you look at the CFPB guidance, if you look at the, ways to shop on great comparison shopping sites that create content to educate home buyers like Bankrate or NerdWallet or LendingTree, they all specify the loan estimate. In fact, when a home buyer gets a fee sheet, a loan summary, a quote, at the top or the bottom, it's legally required to say in big bold letters, this is not an official loan estimate. Make sure you have an official loan estimate before you make a financing decision. Something along those lines. And there's a reason for that. Those quotes are very often not what a home buyer will end up with. A lot
Right.
of things will change between the time that they get a pre-approval or a loan summary or a fee sheet and the time that they're locking in a deal. Uh, for most lenders, typically, and I won't say all because I imagine that there are some exceptions, but this is not the status quo. A lender needs a purchase contract to formally and officially complete a loan application. Um, and there are six critical pieces of information that are needed for a loan officer to complete an application before they can disclose an official offer, a loan estimate that's regulated, that can be binding, that the borrower can lock in so that the rate doesn't move, so on and so forth. And at that point in time is when the borrower has the highest amount of leverage, the biggest bargaining power, if you will, the most incredible opportunity to find savings in the market. But it's been a very time-consuming process at the wrong moment in time in the purchase transaction. So we realized that there's a big need for technology to make it faster, make it simpler, make it easier for someone to execute the best form of shopping at the right time. And so Fincast is the place that anyone can go upload a loan estimate, and our AI engine will authenticate it, analyze it, anonymize it, shop it for the borrower across an extensive network of lenders that reverse bid to beat the existing offer. So anything that we find is better than what you have. Um, and then bring those offers back to the borrower to simply click on the one they like, connect with it, and lock in the savings. And we can talk, in a little bit about what savings means, but it's been highly effective. And we launched our beta um, this past year, middle of the year, and very quickly saw tons of adoption because this is a big need. And so we're very excited to be solving a problem that truly helps people. I didn't mention this before, but I think it's important to note this is a totally free tool for people. And we're trying to do our part and make sure that a person buying a home who's being locked into a financial obligation for a long period of time, is able to make the right decision, has information and transparency around options and market, and can make an informed, peaceful decision. And so that's what we're fighting for.
Nice. I like that. Really like, I think the word of the year in real estate is going to be transparency. And, a lot of people feel that, they've had either the wool pulled over their eyes, when it comes to real estate, a real estate transaction, not everyone's familiar with it. They don't understand the process. They don't understand, like, people, I talk to people every day. They're like, hey, I want to buy this house. I'm like, great. What's your pre-approval? Like, they don't, like, are you pre-approved? Like, a lot of people don't understand that you don't, you really can't go shopping until you know how much buying power you have. So, and the question is, and I've seen a lot of this on social media. It's like, like, what came first, the chicken or the egg? Is it the realtor or the lender? So, but really, I'm finding that, the more that the lender and agent can work hand in hand, the smoother the transaction is going to be. Communication is always key in a real estate transaction. So, and knowledge is power, which hence, this is why we're, you know, coming out here and, giving our 2 cents as to what the market looks like, how a home buyer can set themselves up for, being in a better position. Just wanted to get your thoughts on that and, your mission with Fincast.
Yeah, so knowledge is absolutely power, and I think it's important for great realtors and real estate agents to support home buyers, and great lenders and loan officers and brokers to support home buyers as well. Um, you know, I think that there's a notion that for the borrower, the bottom line price is the most important. And for the lender, oftentimes, the argument is price is one factor and service, communication, follow through, delivery, et cetera, is the other. And as a former lender and originator, I wholeheartedly agree. But this past year were over 5,000 institutions, companies that did enough mortgage volume that they had to report the findings to the government. And, across those 5,000 lenders, around 20,000 plus branches and, 150 to 200,000 different loan officers, not including what are called federally licensed or depository loan officers, meaning that they don't need individual state licenses. There's also a notion that a local loan officer is going to serve you better. And in some cases, that may be the case. But the truth is, in most cases, for most mortgages, they're going to be sold to an investor, a buyer, typically an agency like Fannie Mae, Freddie Mac. People may have heard of these agencies, or
Right.
GMA. The servicing, meaning the company that's going to collect your payment, will most likely be sold. And in fact, on page 3 of the loan estimate, you should be able to see, in most cases, I think, whether or not the lender that's giving you the loan intends to retain the servicing or not. And there's a lot of options. And every point of sale, a great point of sale, meaning a high quality lender that's going to communicate with a real estate professional, that's going to communicate with a home buyer, that's going to help them think strategically, not just about how to buy the house, not just what their buying power is, but how do they think about their future financially? What type of monthly commitment are they able to sign up for that's going to continue to empower and enable them to grow in their other uh, avenues of life, financially, personally, professionally? What does that look like if markets change? How long should they be, forecasting a commitment for before they can consider alternatives in the future, et cetera? Quality professionals that can guide someone through the transaction. They don't need to be local. They don't need to be someone that your real estate professional has worked with before. They need to feel good to you. And there's thousands tens of thousands of fantastic professionals in the industry. But here's the kicker. None of them set the pricing for the mortgages that they can give you. Totally different teams, totally different factors create their pricing. And all the pricing is different across the market. So for a home buyer that's going to get a mortgage, it has been proven that there's more than a 50 basis point or 0.5% of interest rate spread in the market at any given time for that home buyer, which can translate to hundreds of dollars in month saved or wasted. That's
Right.
pretty massive for someone, when we're talking about the cost of living just going up across the board. That's a
Right.
that's a game changer.
Mm-hmm.
Another piece of information is even with rate parity, meaning the same rate between lenders, the cost to get that rate can be different by thousands, tens of thousands. I've seen a $25,000 difference for the same rate between lenders.
What's causing that difference?
A lot of things causes the difference, but some of those are uh, what's the cost of the operation where margin needs to be built into the rate to pay for that lender's business to function. Others are, is that lender transacting or trading or selling that loan right now? Like, how is their capital markets team hedging, planning, selling, trading particular types of products, meaning mortgages in the secondary market or with agencies?
Mm-hmm.
So demand for specific products can vary between lenders, and
Right.
that results in different costs for rate. Um, just the general profit margin that a particular point of sale is generating for um, at that moment in time. And even within a lender, there's different divisions. You may have heard the term retail lender or consumer direct. Maybe not if you're not in the space, but consumer direct is going to often have substantially thinner margins versus a retail channel. And they're going to have different ways of ultimately reaching the market and trying to drive awareness and new business and, you know, do mortgages at the end of the day. But
Right.
their margins are different. Their pricing is different, even within the same lender. And so when people say, what's the rates? What's the rate for Rocket? What's the rate for, Loan Depot,
All
Nations,
right.
company that I used to work for, even, a real estate company,
Hear
has
that
a
question
lender.
every day.
Hear that question every day. And here's the truth. It depends who you're working with at that lender. It depends when you're working with someone specific at that lender. And it's changing all the time. It's going to go up, it's going to go down, it's going to go up and down, up and down. It depends how long a time period you're looking for. And at the end of the day, you got to get to a point where you can lock something and shop something. Lock to hedge against things going up so that you're comfortable. You negotiate with a single lender the best thing that you can get. And by the way, you can only lock after you're under contract for a new home because that's when you give the lender that pre-approved you a purchase contract. That's when they can take the data from the purchase contract, complete the loan application, disclose to you the loan estimate, negotiate with them and select the configuration of the loan. I want to, this points with this rate or no points with this rate and this credit, like whatever combination feels the best to get to the monthly payment or monthly commitment that makes the most sense for you with costs associated with them. Figure that out. Get to a point where you're comfortable moving forward with that lender. Lock it and then shop it. And you can do that on your own. Take that loan estimate, see if anyone can do better. It's okay. It's your right as a consumer. It's the difference in tens of thousands of dollars statistically. Like some loan officers, you will not be able to beat that deal. You may come back and have peace of mind. Oh, this is a great offer. I'm gonna go with it. Or the options in the market are not meaningfully different enough for me to make a change. But you'll have transparency. And in some cases, you're going to be blown away by how much different the options are in the market for that deal. And that's really what Fincast does, is it makes it very fast, very easy, and private, meaning you're anonymous when you use
Mhm.
our free tool to do that exercise, that effort. Throw your existing offer into the marketplace, let
Mhm.
lenders try to beat it, see if they can. Today, 27% of lenders can't beat the offers. 73% of the time, we find meaningful savings. And we
Gotcha. That's
average,
pretty
just for
awesome.
perspective, we average just shy of $50,000 in savings per home buyer, which is not a small amount of money.
Yeah, no, it's not a small number. I think of a few things I would do with an extra 50K. So so obviously, this is, new technology. It's always growing, in the time that I've seen artificial intelligence grow, it's years, and it's every day something different. How are you guys working with current lenders, and like what's been the reaction to that, to Fincast?
Yeah, so for Fincast, we're extremely careful to screen every lender that we enable access to Fincast borrowers, what we like to call Fincasters. We make sure that they're a high quality lender, that they understand the expectations, that the offers that they make are legitimate and real and can be fulfilled, that they can close deals on time, that they can communicate and will communicate with real estate professionals, and that they move fast. Um, we make sure that every lender meets a very high bar, and if they don't, they are removed from the Fincast network. So the standard is already as high as it gets when we talk about the quality of the lender that has access to Fincast and the borrowers that are trusting Fincast to try and find them a better option that saves them money. Um, on the lender side, we I built Fincast originally to solve a problem for lenders too, which was we had no transparency, intelligence, information on how quality, qualified, and competitive the offers that we could make our clients were at any given moment in time. And we would find ourselves wasting a lot of resources trying to work and help people who could get a better deal elsewhere, which didn't work for us and it didn't work for them. So Fincast became an incredibly competitive, exciting source of new business for lenders that want to win new business and have great products, great pricing, great service to do it. We've been able to help lenders 17x their next best source of business in terms of ROI and conversion rate and reduce their cost per funded loan. So we're very proud of the fact that the market that we've created and the technology and the way that we've empowered borrowers and lenders to find each other with AI has resulted in efficiencies that are returning savings about 11.5% of a loan amount back to a borrower and reducing cost per funded loan for a lender by about 20% on average today. We're very
All,
excited to create efficiencies that help both sides of the market.
all great savings, all great savings, all great information. It's really great to be able to see. And now being on the other side of the table as an agent and seeing like behind the scenes, like people are like, oh, like what is the day like for you? Like, what aren't you? Is it like selling sunset? No, it's not. It's basically, going through and working with, my partners, lenders, whoever it is, lenders, inspectors, banks, what have you. But to have a tool to really provide transparency for consumers who might be in the dark about a few things when it comes to a real estate transaction. I mean, I think I was just at a meeting yesterday, and our president of Pennsylvania said this will likely be the year where they were talking about first time home buyers last year, they're going to be first time home sellers. So how does that look? We don't know. And of course, it's real estate and everything's negotiable in real estate transaction. Um, and I guess how does Fincast really help the consumers along with their lenders really know that they're getting the best deal?
Yeah. Well, I think you mentioned something really interesting around like the you're a first-time home sellers. That's a pretty cool notion. Um, Something that I've seen across the board is buyers have been getting spooked mid-transaction and they're second guessing their commitments. So a buyer will get it pre-approved. Unfortunately, during the pre-approval process, the buying power, if you will, or the sort of loan amounts are dictated based on rates then. As rates shift up, that buying power decreases. By the time they go under contract with their prior pre-approval, they realize, holy cow, I actually am not comfortable with the payment on this home with where rates have gone, but I'm under contract. I have like a financing contingency window. I'm, rethinking things. I think I'm going to cancel this purchase contract on the buy side. And
Right.
sellers are missing out on deals from qualified buyers because they're nervous, they're uncertain, they don't know if they're making a great decision, they wonder if they could do better, so on and so forth. We found that real estate professionals that on the sell side and the buy side use technology and tools to help instill confidence in their home buyer that you can make a great decision even in a tough market when you have information and using technologies to provide that transparency. Appraised value, inspections are a great way to understand, information about a property.
Oh yeah.
Fincast, which provides intelligence around, is this a good mortgage offer or not, or can I do better? Um, so on and so forth. Like these things can, during the process, instill confidence to maintain continuity for a home buyer with a home seller and get the transaction to completion.
Right.
We've actually been able to save deals where buyers have been spooked by just giving them access to a better deal or confirming that they already have a great deal. And they're missing that peace of mind. They're very insecure. And that helps a home seller ultimately sell the home when they need to sell the home. So a home seller, a selling agent, can actually use Fincast as a way to keep a buyer engaged, to keep a buyer involved, to make sure a buyer maintains confidence to complete the transaction and get the deal done.
Right.
Um, we think that there's value there, but in terms of how we do that with lenders and home buyers, um, at the end of the day, we don't have a particular preference around who a home buyer, a borrower works with from a lending standpoint.
Right.
We want them
And
to be able to choose who they want to work with,
yeah.
but we want to tee up the best choices in the market much easier than they can today with technology.
Right.
And so we have seen, frankly, where we found substantially better deals for some people and they stay with their lender. And that's okay, the original one,
Yeah.
but at least they know. And we've also seen where they switch lenders because it saves them a boatload of money.
Hmm.
In fact, we had a borrower who actually works for a bank. She works at a bank
Yeah.
and she has her primary mortgage for her primary home financed by the bank. And she wanted to buy an investment property. And so she got a loan estimate for an investment property. And she came to Fincast and she said, she Fincasted it, but she sent us a note in a support ticket.
Hmm.
Um, just so you know, I work for a bank and I don't have any intention of not doing my mortgage with this bank.
Right.
I'm merely seeing how competitive this offer is. And if you're able to find better offers, I'm sure that they will accommodate me. And so we took her offer. We went to market, lenders bid. We found her an offer that would put 12% of the loan amount back in her pocket. She took the offer that she got from our lender back to her own company, her bank, where she has her primary mortgage and her checking and her savings
Hmm.
deposits, et cetera, et cetera. And she was shocked that her own bank couldn't come close to the offer that this lender gave her. So she
Right.
switched and it went flawlessly. She was able to buy this property, put money back in her pocket on a closing at the closing table and a monthly basis, which of course cash flow is critical. Why overpay if you're trying to generate monthly income?
Hmm.
Able to retain more of her net revenue from her rent roll on a monthly basis by doing this. And now she's become a huge advocate for Fincast because she understands that different lenders can and can't do different things at different moments in time. And there's lots of great lenders out there. Great lenders, great hardworking professionals that have great deals that will never be seen unless you use technology to expose and unlock access to them.
Gotcha. That uncovers a lot. And people, consumers might not realize how many people are actually working in real estate, as a whole, because there's so many moving parts. I guess what's like what do you look for? Let's go back to your days as a lender and MLO. What exactly did you do, and what would be like what you would consider like a star client?
I mean, a star client, it's hard to like profile a star client because I've seen so many different types of borrowers in the sense that like, you know, what kind of income they have, how clean their docs are, how good the credit is, how, much money they have for clothes, if they're using co-borrowers or getting gifts. Like there's a lot of nuance.
Right.
All that said, a star borrower is a borrower that moves fast, communicates well, and asks the right questions. Doesn't matter what the profile of the borrower is. And by the way, like there are some really interesting companies out there that are trying to increase access to credit to previously underserved, underrepresented, potentially marginalized communities
Yeah.
by doing things that are so practical, like using rent payment history as a way to generate and develop a credit score. Whereas previously that's been limited to people that have a mortgage but not a rent payment. And what's
Hmm.
funny is like all of the qualifications for a mortgage come down to ability to repay. Like, are
Yeah.
you able to, and someone who's likely going to repay this loan? Rent history is a fantastic indicator of someone who's committed to something, makes payments on time, has the revenue or cash flow to do that, et cetera. And so like there's great companies that are trying to figure out ways to unlock access to credit for new communities that previously struggled to access that credit. We don't do that. It's fantastic, but what we do is we say, okay, wherever you, whoever is able to ultimately get credit, um, we'll make sure that you're getting it at the right price because we don't want you to overpay. And frankly, like we found that in mortgage alone, it's estimated that American borrowers are overpaying for a mortgage by about $150 billion annually
150 billion with a B.
with a B.
Oh wow.
Our mission as a company is to save American borrowers 30 billion by 2030. And we think that there are far better things to do with the money than overpay for something that they don't need to overpay for. And so going back to my days as an MLO, I would say a star client is someone who asks the right questions, is interested in understanding the financial strategy around a mortgage. Like, here's an example. There's something called a break-even point.
Right.
And some people are just chasing the lowest rate. And if that's really the desire, that's fine. Sometimes it's going to cost more. You're going to have to pay points up front, which is basically buying the rate down in advance for the life of the loan, for example.
Hmm.
Um, when you pay up front for a lower interest rate, it's important to work with your professional or to use tools to calculate what the payback period is on that. So if I pay whatever $1,000 up front to get the rate from X to Y, and that's going to reduce my monthly payment from A to B, the difference between A and B is my monthly savings.
Correct.
How many months of savings do I need to ensure before I recoup my investment of paying for that lower rate? And will I be in the loan long enough to do that?
Right.
And is that money that I'm paying up front better spent on buying the rate down, or should I invest it elsewhere? Should I put it into the house? Should I put it into the market? Should I put it into paying off other high interest rate loans, for
Hmm.
example, or credit cards, things like that? So working with someone to structure things or having a general understanding of it is really helpful. And I say a star client, if you will, understands the opportunity and asks questions to seek guidance around these types of topics.
No,
Um, a
you're
star
absolutely
client is
right.
someone who's an informed client. An informed client is someone who does their research, asks the right questions, and shops so that they
Right.
don't.
Excellent. So I know you were talking briefly about trying to get rent history as a way to really like determine credit worthiness, for a mortgage. Do you see that happening at any point in the next like 10 years, 5, 10 years?
Definitely. There's an amazing company called Esusu, Esusu, that is changing the game when it comes to reporting rent payments to credit bureaus and working with the government and Fannie and Freddie and other agencies to ultimately incorporate rent history into ability to repay calculations and credit calculations. Um, there's been a huge shift. It's not, I would say, like mass market, so to speak, yet, but there's definitely movement happening in the government that ultimately wants people to achieve the American dream of homeownership, wants to figure out creative ways as things have evolved throughout the years, where rent's not a small chunk of money every month. I mean, it's the
No.
equivalent to a mortgage, if not, in some years it's higher, some years it's lower. But it's a strong indicator and it should be incorporated. And so we are seeing a transition there. Susu's doing a great job at spearheading that initiative.
ESU.
Yeah.
Gotcha. That's really cool because I do know that a lot of consumers who I talk to might be currently renting. They say, "Hey, I have like no credit history or no credit at all." Like, what's the steps for that? That's not my. I I'll be full transparent. I stay out of that lane. That's not my specialty. I deal with the buying and the selling of the houses. I'll leave that conversation to someone like you or my lender or someone else who's you, you know versed in that. They've taken all the right preliminary courses, all the tests and whatnot. They're an actual mortgage professional.
Yeah. And by the way, like a lot of mortgage professionals, to be completely frank, like unless they do their own education, um, they're not necessarily well equipped to have these conversations. Um, and it varies. A lot of it's opinion based. But I think one of the cool things that's changing more than ever since COVID is technology's becoming rampant and far more accessible in this transaction space for people to make better decisions. So a company like an Isuzu, a company like a Fincast, all these tools that are not depending on opinion or subjectivity or the guidance from a professional that may or may not be guiding you correctly. I saw someone post on Reddit recently that they trusted their loan officer to help them improve their credit. And that loan officer incorrectly advised them to pay off a car lease, thinking that that was going to reduce their debt to income ratio, improve um, their credit worthiness, et cetera. And that was not a correct statement. It fundamentally doesn't. The difference between a lease and a loan are completely different when it comes to debt to income ratio, credit worthiness, et cetera. And so, you know, there shouldn't just be a single point of reference for someone to make such an important decision. Like someone could be having a bad day, they could be distracted, they could give you the wrong guidance. And, frankly, similar to you kind of staying in your lane around real estate, like mortgage people get asked a lot of questions that are beyond the scope of mortgage and they try to be helpful, which is great, but they know mortgage. They're
Yeah.
not they're not credit experts. They're not, debt management experts or debt consolidation experts. We dabble in that because it's the mortgage is a very strategic vessel to, maneuver and manipulate and manage debt and credit and things like that well. It's a great resource, a great tool, a financial instrument, if you will. But they're not experts and they're not well trained. They don't go to school for credit. They learn
Nope.
about mortgage. And the truth is there's a lot of loan officers and lenders and brokers and professionals that may steer people wrong. So how do we advocate for, distribute, broaden awareness of tools and technology that are specialized to create transparency, to create access, to create opportunity for people to make better decisions, to become credit worthy, to become better bar. There's a really cool tool called FinLocker as well that's helping people prepare for homeownership, to save for homeownership. There's great tools out there, great technology built for home buyers and prospective home buyers. Um, and I think real estate professionals, the best thing that they can do is be a wealth of knowledge when it comes to not how to do something, but what tools are there to help someone achieve a goal.
I agree 100%. I mean, as someone who bought a house sight unseen during the pandemic, during the time when, real estate was flying off the shelves at record numbers, people were overpaying sometimes hundreds of thousands of dollars for a home. I mean, I get it. It's one of Maslow's hierarchy, it's shelter. So, I mean, it's something that everyone needs and should be informed about. And it's my goal to help consumers, clients, what have you, and just spread the word. Just like, hey, there's options out there. I like I said, there's all like knowledge is power. The more we know, the better off we're going to be, the better consumers that we work with, they then become clients and repeat clients. The more that we can give them options and knowledge about this, I don't tell a client what to do. I say, here are the options. Here's what we can do. Here's what happens if we do this. Here's what happens if we do that. So, and at the end of the day, everyone's their own person.
Absolutely. Absolutely. But I think, to your point, like, unfortunately, it seems that a lot of professionals are, kind of keeping resources close to the vest sometimes because it's in their best interest, not necessarily the client's best interest, because I'll give you a real example. When I was originating, um, during the pandemic, refis were going crazy because of low rates, and lenders had too many people to work with, frankly. So if they weren't a clean file client, they weren't getting much attention. They weren't getting callbacks. They weren't getting emails back. They weren't getting time of day from a lender, from a professional. And one borrower I was trying to support didn't have the credit to qualify for a cash out refinance to do a debt consolidation. That would allow him to free up like around $1,500 a month in payments that he could use for his school for his daughters. And um, he wasn't getting the time of day from any professional because he wasn't ready to do a deal. And everyone was so busy doing deals. But I decided I want to help this person figure out a way to get credit worthy. And so we devised a strategy. Took about a year of, back and forth effort. And he got to a point where his credit was ready to go. And during that time, he said, you're my guy. Nobody's given me the service, the time of day, the guidance, the just cared. And I said, thank you. I appreciate that. But obviously, I'm an advocate for shopping. I'm an advocate for a consumer having the ability to make a great financial choice. And when it came time to him doing the refinance, he came to me with an LE from another lender, and he said, "You're my guy. I want to do this deal with you. Can you get me close to this? And let's do this deal." And I said, sure, let's do it. And put the numbers into our system. And my jaw dropped. This was my aha moment, frankly, for Fincast. It was like, I saw that this guy who we did everything we could to help him figure out a way to save. And I earned his business and I earned his friend's business because of the service I provided. But for me to match the offer that he had, he would have to pay 4 points. In this case,
Mm,
$24,000 at
yeah,
closing just to get the same rate that this other lender was able to give him. A real offer. And I didn't create my pricing. I didn't set the rate. I wasn't trying to like do him dirty, or I wasn't untrustworthy. I
yeah,
wasn't dishonest. I didn't have control over what the rate was that my lender was creating for this particular product at this moment in time. And I had to tell him, I really want to work with you, but I can't in good conscience like do this deal. Like you have to go with this other option because the
right.
whole point of this is for you to save money, not waste 24,000. And imagine if he didn't shop. Imagine if he just said, I'm going to work with you because I like you, I trust you, you helped me. I mean, look, that's awesome. If you feel like my service is worth $24,000, then sure, I'll take it. But it's not a good financial choice for you. It's not a good financial choice for a borrower. Like money at the end of the day is a commodity. And what's happening in this transaction, you're getting money that you have to pay back plus interest to buy something important. It's a commodity. You shouldn't, whoever you work with is going to make some money and it'll come back around. You'll recommend me to people because I gave you great service and maybe I'll be the right product for them at the right time. But at the end of the day, like you as the consumer should choose the right offer because it's the right financial choice. And
I
we were,
agree.
it was a tough pill to swallow at the moment, but I firmly believe that consumers should make those choices because that changes lives. And
Oh, 100%.
real estate professionals, lenders, we're in the business to make money, but we're also in the business to help people achieve the life that they want. And this is part of that. Losing business may help someone achieve the life that they want because they get the right deal. And that's okay.
It's always okay,
It's okay.
Jamie. I think we're all going to be okay. And just a couple more questions. Just, I guess, how do you see Fincast? How would, in your mind, how does Fincast grow from this point moving forward? What in your mind, where is Fincast in, you know, a year, 3 years, 10 years,
Yeah.
50
So we're
years?
in our infancy right now. We've been very proud and excited by the progress we've made, the results that we've created, the savings that we found for people, the opportunities that we've brought to lenders. Um, and the crazy thing is we've done no marketing yet. So over the course of the next year, we hope to start marketing so that people understand that a free tool, a great tool, technology exists to to serve them, to help them shop, to help them find access and choose the right deal for them. Um, we hope to win over the hearts of great professional real estate agents that care about the client, and regardless of the way business has been done for the last 20 years, regardless of their highly preferred lender relationships, they're really in it to help the client make the best choice. Um, Help the client understand their options and view and understand the value of Fincast as a tool that they can have in the toolbox as a professional to ultimately win and earn the trust and support of a borrower by not only getting them in the home of their dreams, but the loan they deserve. Um, we hope that we can continue to help people save, and grow the network of quality lenders that leverage Fincast as a way to win business, and understand margins and pricing and market. We hope that we can continue to help home buyers get peace of mind and save with confidence. And we hope we can empower real estate professionals to be home buyers heroes in the transaction. Over the course of the next, 3 to 5 to 10 years, we see fincasting as a de facto step. Like, it's really a no-brainer. There, like any loan that someone gets, that offer should be fincasted. And in the next 10 years, whether it's a student loan, an auto loan, a personal loan, a mortgage, um,
So you guys don't just do mortgages.
credit in the future, no. Today, yes, just
Yeah.
residential. Eventually, want to expand to commercial, but frankly, we view FinCast as a fundamental change in how people find access and choose deals for personal finance products, and we want to be the last mile shopping and price optimization tool that people depend on for critical purchases online across the financial spectrum. We think it's a radical change. We think that companies like Affirm and Klarna, basically the buy now, pay later companies, took a concept that's from the Stone Ages, layaway, and they made it digital, basically. And we're taking the concept of offer shopping, which is happening by sophisticated shoppers offline today, and we're making a digital experience and scaling it up for people so that they can do it within a matter of a couple clicks. We're trying to, make uh, transactions completely equitable. So by removing identity from the transaction, in the sense in the shopping experience, we eliminate bias and spam and discrimination, for borrowers, for lenders, et cetera. We think that's really important, and we want to make choice easier. And that's what we think is going to happen. We think Fincast as a brand, Fincasting as an action, and experiences powered by Fincast and other partner platforms will be a normal thing. Um, Kind of like Carfax, maybe, where you don't really buy a pre-owned vehicle without getting a Carfax anymore. At one point, that was kind of new, or dealerships didn't really like that transparency. But we think that Fincasting an offer will tell you either, Sam, you have a great deal, congrats, or hey, here are better options, and we'd love for you to have access to them so you can choose the one that you like the best.
That's great. And that's definitely an essential tenet to why we're doing this. And I'm really excited for you. I've seen, you know, I've had the honor of knowing you a long time. Like we used to go fishing as kids and, all the fun playing basketball. But so proud of you and happy that, you're bringing this tool to the market, because I think this is something that consumers can really see a benefit from. And like I said, opening up more transparency towards an industry that really hasn't had a lot of it over the past few years and has seen some, you know, kickback because of that.
Absolutely. There's a lot of shifts happening. We want consumers to be as empowered as possible to work with the right professionals, to choose the right options, to make the right decisions. We're very proud of it. Really appreciate the invitation to be part of this awesome podcast and support you as a real estate professional. And helping get the word out, helping share the story, helping educate people on the right ways to approach mortgage, the right way to shop, the right time to shop, the difference between them. Um, and how people can ultimately lock in the right deal, not the wrong deal that puts a little bit of money back in their pocket, and in some cases, a lot of money back in their pockets.
Awesome. Very cool. And the website is fincast.com or go Fincast.
It's gofincast.com. Same handle on socials. We just started launching educational content across socials. So GoFincast on, Twitter, Instagram, Facebook, LinkedIn, etc. www.gofincast.com is the website, and people are welcome to message us through our socials or website, and we are here to help.
Awesome. How do you spell your name again? It's Benjamin. And I know
Schieken.
your last name is kind of like mine. It's a little tricky. If you could just spell that for our viewers, that way they can find you on social and whatnot. And that way,
Sure. Schieken, Benjamin Schieken. And it's Benjamin at gofincast.com.
love it. Thanks, Ben. Really appreciate it.
Pleasure. Pleasure.
Yep.
Thanks, Sam. Congrats on the podcast. And let's keep getting people into the right home at the right prices
Yep. With real talk.
with real talk.